Good morning, people. Morning, morning, morning. Um, what do we got to say? It's Wednesday, um, July 10th, and yet another all-time high, right? We've traded a new all-time high on the S&P 500 futures pre-market here by about a point, right? It's nothing insane, but an all-time high nonetheless. When will they ever get tired of buying these micro dips? Now, like I was saying yesterday, trading into all-time highs is a difficult construct for myself because I don't have that much past imbalanced information. I don't have that many past orders. I don't know how, like, it's got to be, I got to play it all by, like, ear, realistically, and see how these orders are coming in and see what's going on, which it's not my favorite thing to do. It's not where I developed more of an edge, right? It's something that I would caution people to take a little more diligently, step by step, ease into it, get that information, let the markets trade in the first like 20, 30 minutes even, so you can gather what's going on, and from there, right, create some kind of trade understanding and plan for the day. Now, there's a very important level here on the S&P 500. I'll talk about that for a bit, then we'll go over some of the news, and then I'll talk about the trade plan for the. I'll talk about the trade plan. What am I going to do? I'm going to talk about the trade plan after that, and then we'll see how we can break down these markets. Now, honestly, there's one very pivotal area for the S&P 500 for me today, and it's going to be that 45, 56.45. If they get trapped and buyers get absorbed into that high and they just get sold off aggressively, that's the high. That's it. Otherwise, we're probably just going to have a trend day, right? Trend day to the upside. That's it. So that's mainly the plan, but I'll go over a bit more in detail and talk about that. But first and foremost is day two. It is day two of Jerome Powell's testimony, right? So fresh off an appearance before the Senate Banking Committee, the central bank leader will sit before the House Financial Services Committee, which many investors are going to be watching, and zeroing in on his words of rate changes. So the current environment and clues of the upcoming policy. There's a lot to digest ahead of the big show. It starts at 10 a.m. Eastern time, so in about an hour's time right now. And the Fed is definitely inching closer to cutting rates due to the considerable progress that has been made by taming inflation, right? Quote unquote taming inflation. However, policymakers still need to be reassured that inflation is moving sustainably towards their 2% goal, meaning a rate cut later this month is likely out of the cards. The the rate decision is, I think, it's the last day of July this month, maybe, right? I think so. But inflation is apparently moving sustainably towards their 2% goal, meaning, like I said, the rate cut is to be expected at some point. It might be unsurprising given a similar narrative that the Fed has declared for much of the past year. But a lot of people are looking at this and thinking that if we open up here, I'll show you the general consensus. If we go into Fed Watch Futures here, right, where we can see some of these probabilities. You can see for July about just shy of 5% chance of a rate cut, 95% as things stay stable. In September, which is going to be the next meeting, we skip August, this is when they're pricing in the rate cut. So reducing policy restraint too late or too little could unduly weaken economic activity and employment, declared Jerome Powell, outlining that the importance of carefully assessing the incoming data, their implications of the balance of risk. So as such, we're looking at now, right, a change slightly higher, right? From a month ago, the chances of a rate cut in September have increased, right, 25%. Well, we can call it 30%. In comparison to pretty much keeping things as is into about the end of the year. So if we take a look at November as well, November, they're pretty much pricing in at least one rate cut by then. And then into December, right, there's a pretty high probability that there could be 2 rate cuts by December, right? So by the end of December, I should say. The semi-annual update on monetary policy also contained the Fed's outlook on the broader economy after somewhat of a slowdown that saw 206,000 jobs added in June, with the unemployment rising to 4.1%. The labor market is pretty much where it was in the pre-pandemic era regarding demand and supply dynamics. Powell added, but the FOMC would respond if it witnesses unexpected weakening. And we've seen that the labor market has cooled really significantly across so many measures. It's not a source of broad inflationary pressure for the economy now. So today's day two. We'll see how that shapes up and what the news looks like. It might be a little... Yesterday, it didn't really move markets that much. Right? Well, NASDAQ, yeah, but specifically the S&P 500 futures. And CRE risk is on the table as well, right? Amid concerns in the sector, Jerome Powell also told Congress that the commercial property industry may remain stressed for years. Banks need to be honestly assessing what their risks are, where their risks lie, and they need to be assured that they have capital and liquidity and the systems in place to manage this risk. So Powell also noted that the Fed's stress test of the U.S. banks this year concluded the large institutions manage commercial real estate risk, as well as most small banks. Regulators are still keeping a close eye on those with high exposure to CRE, as higher for longer rates are expected to push more banks to build loan loss reserves through 2024. So a lot of things are shaping up. We also have CPI. Speaking of inflation, we've got CPI data that comes out pre-market tomorrow, and then the PPI pre-market on Friday. So in terms of what we got going on in these markets today, right, overnight, Japan is up 0.6%, Hong Kong is down 0.3%, China is down 0.7%, India is down 0.5%, in Europe, London up 0.6%, Paris up 0.8%, Frankfurt up 0.7%, the S&P up slightly here, about 0.3%, or 0.2, I should say. NASDAQ up about 0.3, and then we have Bitcoin up 2%, 2.2%. Now, today, a lot of people are going to be looking at Powell's semi-annual monetary policy testimony, which comes out at 10 a.m. Eastern. Along with that, we have some other news that's a bit less important. We have, at the end of the day, Fed's Goolby and Bowman. They're going to speak, two Fed speakers. We have a 10-year note auction as well into the afternoon. Now, if we take a look at this, right, morning everyone, that's joining me here on YouTube. Take a look at this S&P. We've been slithering, creating all-time high after all-time high after all-time high. This is not necessarily the same as, per se, creating an all-time high expansion, rotating, creating a balanced auction, and then progressing higher. It's just continued all-time high after every single day with a tight range that creates these all-time highs. So, not that I'm bearish on this, right? It's hard to be bearish on this, but it's getting capitulative, right? Once we start entering distributions lower, okay, fine. It'll be great. You'll have a better understanding. Under that 56.30, fine, right? There could be a little more downside momentum into about 56.15. But right now, it's getting a little top heavy. And today, the main thing that I'm going to be looking at is realistically 45, like where we're trading right now, 56.45. This is a do or die. We either start a trend day to the upside from this area, or we get a significant pullback that actually allows for better buyers that come into prices potentially at 56.15 or 5600. Right? This is it. This is a pivotal moment for these markets. They either slump it from here, or we're trading 5,700 by the end of this week, realistically. CPI and Powell are most likely going to move markets, so we're going to have to keep close eyes on that news event that comes up the next 2 days. And realistically, with the CPI data, like JP Morgan and other big banks, they put out their expectations based on CPI data that comes out, and there's pretty much an 85% chance, based on big banks, there's about an 85% chance that the markets move up from CPI. So, softer inflation print allows for prices to rally higher. We're in a very strong position. Markets continuously making new highs. So this is a chance, right? Jerome Powell can allow for better buyers to come in at lower prices today, or we're just going to get a slow, shitty grind to the upside, which I don't love trading, honestly. I don't love trading these all-time high breaks. So I'm going to really, really sit on my hands and see what the possibilities of today look like. So let's open up our live trading room today, people, and I'll see you all in there. Check out community.tradeproacademy.com, and I'll see you tomorrow and to wrap up the week as we talk CPI data tomorrow on this update. So thank you all. Thank you all for joining me live. Stuart, Michael, and I will see you tomorrow. Happy trading.